Good morning and welcome back to Almus Market Mornings, your daily dose of global financial updates. Global financial updates or global drama, that's what's going on in the Silicon Valley between the OpenAI founder Sal Altman and the board of the company which famously made the Chat GPT software. It's chaotic just like a television soap. First Sam Altman steps down, then he's hired by Microsoft and subsequently the whole company, and majority of the employees threatening to quit. Amidst this drama, Microsoft shares had a good time along with some other tech sector stocks caused a rally in Nasdaq. Dollar continued its losing streak. Good morning, JK. Seems equities are having a good time, and in currencies, Chinese yuan has strengthened quite significantly. So, is the worst over?
Good morning, Swaraj. Yes, I think on the tech sector, of course, the news of the two officials going back into the Microsoft, functions has actually boosted the sentiment. Although they may or they may not directly work with Microsoft, but CEO of Microsoft himself has, announced that they will be working with Microsoft. That is one positive news that the market had latched onto. The other was other is actually the Nvidia's quarterly result that is expected today, and it could actually exceed the very high expectations of investors thanks to big demand for generative AI. So these are the two possible triggers for the tech sector doing extremely well and carrying the whole market with it yesterday. But mostly on the economic side, we did not have much of any news, but except the leading economic indicators from the US by conference board, and the LEI actually fell 0.8% in the month of October, and on a 6-month basis, index is down 3.3%, and it remains in a negative territory. And its 6-month and 12-month rates are also held in negative territory as of October. The conference board also expects elevated inflation and high interest rates, contracting consumer spending due to depleting pandemic saving and mandatory student loan repayments to trip the economy of US into a very short recession. The index has been a reliable indicator of prior downturns, and many see this as a recession sometime in 2024, although it could be a very short one as of now. But then there was also a forecast of recession in 2023, and that has so far not proved correct. Yeah. Also, on the economic side, there was some relief for some of the European sovereign names, as the Moody's upgraded both the Italy and Portuguese debt. In fact, they upgraded the Italy sovereign from negative to stable, and pushed Portugal's long-term issuer rating up 2 notches to A3 from Baa2. So amidst all these, yields have stayed in a range, but in the lower range, of course, with only interest of the day, which was surrounding the 16 billion 20-year bond auction, which ultimately got a very good response. Market was very skeptical about this because the 30-year bond issue had received a poor response, and with no fresh triggers, bond prices held onto their highs, or I would say the yields were holding on to the in the lower side. Yields have, of course, come a long way down from the significant highs that we saw just a month back. 10-year in particular is nearing a crucial 4.3%, and a further breakdown from here needs either inflation to fall substantially, or any change stance from Fed, but that can happen only with a big slump in consumption. That, in other words, means the economy to face a big slowdown, as the US economy is mostly consumption driven to the extent of 68%. Yes, based on Moody's news, Italian bonds outperformed, and the spread between Italian BTPs and the German bonds, which has been one of the focus point recently, has actually tightened from 208 basis points to 173. Fed speakers as well as the Euro zone, uh, central bank members have been vocal in their statements to indicate they're wanting inflation further down towards the inflation target before pushing, and they are pushing against the market's extreme dovish expectations, pushing against the market's dovish expectations. At the same time, the Fed Watch tool indicates as much as 98% probability of at least 0.25% rate cut by Fed in their first May 2024 meeting. So you see, the market is going back to history of Fed statement and actions, and it's more than 3 years since Jerome Powell gave one of his best one-liners. We are not even thinking about raising rates, and that he protested in 2020, but he kept to that line firmly for another year and did not hike rates till March 2022. Now, more or less, including Powell himself, says the same thing, that they are not even thinking of cutting rates, but it may not be too far from now that they may be forced to act if the economy slumps. And there are indications that going by leading economic indicators and employment and inflation, there are indications that the rate cuts can come much earlier than what they themselves have been saying. On the stocks, of course, the tech sector in US pushed all the indices to the highs. Japanese shares hit highs seen not since 1990. That means the highs which was last seen in 1990 was seen yesterday thanks to strong earnings and offshore demand. We have been hearing about very large investors once again getting back into Japanese Japanese stocks. Of course, on today's calendar, we have very little US existing home sales, and of course, Fed minutes after midnight India time we will have. And I will also look at CPI data from Canada to throw light on how the global inflation picture is evolving. However, most market men might move out from their actions because of the Thanksgiving holiday that is coming on Thursday. On the currency, dollar was on the defensive most of the day. And the euro and the GBP, of course, have been on the limelight, gaining substantially in the last few weeks. But I think focus has now come to the two Ys, that's the yen and the yuan. Yen has pushed below 148, and yuan has gained 3% from the year's worst levels. Positive outlook emerging after Xi and Biden meeting. Some green shoots observed in the economy. US yields peaking, eroding yuan's disadvantage, and some prominent investors expressing their inclination to reinvest in China. In fact, Bloomberg reported Chinese regulators are drafting a list of 50 developers eligible for a range of financing. Actually, the real estate in China has been a big headwind for the markets. And what we may not have, many may not have noticed, is the strong rallies in the Nordic currencies to the extent of 6 to 8%. I'm talking of Swedish kroner and Norwegian kroner, which have remained under pressure all through the last year. So dollar weakness is becoming quite entrenched, and we are in a very non-friendly dollar environment. But none of that is reflected in the rupee. Rupee again closed at its previous low of 83.34, and the flows once again working against the rupee. Strong demand seen from foreign banks as well as the state-run banks, with a little inflows from corporates or investors, again forcing the central bank to keep offering the dollars. So and of course we are seeing a lot of cross buying in the currencies like Euro INR and GBP INR, which have moved substantially more in the recent weeks, and maybe some unwinding of carry positions against these currencies, or even loan repayments in these currencies, which is keeping the dollar INR also relatively strong. So that's it. Expect a more quiet week ahead, barring a few data points because of the Thanksgiving holiday. Thank you.
Thank you, Jackie. And apart from the tech sector drama that's going on in the US, on the economic side, there was not much of data except the conference board related data. But on the other hand, the Moody's upgrade of the Italian and Portuguese debt led to some rally in those yields. Now, Italian and German yield spread shrank significantly after this upgrade. 20-year paper issue in the US had a good response. Yields continued to trade on the lower side, but Fed members are pushing against markets' dovish expectations, as even Fed Watch is indicating a strong probability of a rate cut in May 2024. Data to look out for would be US existing home sales and Fed minutes, which would be out today. And of course, from Thursday, it will be somewhat of a shallow market since there is a Thanksgiving holiday coming up. Yen has pushed below 148 and yuan has come below 7.15. So a lot of weakness in the dollar being seen, but rupee remains immune, and we closed in fact at 83.34 due to lack of flows and strong demand. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.